So, fundamental analysis 101. So we're going to cover some basics here. We're also going to cover some of the things that I think are more or less important to talk about when it comes to fundamental analysis. So if we're talking fundamental analysis, most traders, and again, does anyone in the audience, throw your hands up if you use some level of fundamental analysis already? Okay, a lot of you guys, a lot more than I thought. A lot of times newer traders, they don't use that, right? They stick to technical charts. And there's nothing wrong with technical charts. I don't want to bash that. They're very valuable as well, in my opinion. But fundamentals are also sort of, I think, a missing link for some people that maybe we can dive into a little bit today. So, in terms of fundamental analysis, we're talking economic figures, taking a look at what institutional traders and investors are up to, what are they looking at, which is stuff that we can actually look at together. We'll take a look at that here today. Seasonal trends. So during the month of, we're in the month of April, is there any recognizable trend on, for example, the US dollar? Does the US dollar tend to trend one way in the month of April? Many traders don't even think about these sort of things, but they're rather simple to understand and can actually add some confirmation to your trading. So, of course, also things like retail sentiment, it loosely falls under, in some ways it's more sentiment analysis, taking a look at what retail traders are buying and selling. What do, sentiment, you often hear it on the television, or if you watch, a news station or something, you'll hear hedge funds are very bearish on the euro, or retail, the average trader is very bullish on something. So knowing these things can be valuable to our analysis. So first, I want to show you in terms of why should you care about fundamentals, why should you consider it. Many of you, who has been trading, anybody traded longer than 1 year now? Throw your hands up if you've been trading or learning about this stuff for at least a year. Okay, cool. So a good number of you guys. So some of you guys might remember that in 2022, this is the dollar. And you can see the dollar just went straight up. In fact, most assets, if you were looking at the stock market, if you were looking at many other assets, they had negative years. It was a terrible year for equities. It was a tough year for bonds. One of the biggest crashes in bonds we've seen in decades, right? The dollar during this time was going absolutely parabolic. This was, if we think in essence, why would this happen? Fundamentally, the Federal Reserve, which sets our monetary policy here in the United States, they set interest rates. If you've been trying to borrow money to get a house, it's been very expensive. If you've been trying to borrow money to buy a car, it's been very expensive. It's because the interest rates are higher. Now this causes, in some cases, dollar strength, which is why we saw the dollar dominate last year compared to all the other major currencies. We've got plenty more though. We've got gold, for example. This is part of the SVB collapse that happened recently. Did anybody hear about that? Right? We had the banks having some serious troubles, regional banks here in the United States, and with that fear, a lot of times when there's economic uncertainty, that drives the price of gold up. Right? Think about it. People buy gold. When do they buy it? They buy it when they're concerned. They don't buy it when things are super optimistic. At least, for example, another one we could throw up there, I'm not sure if it's in the slideshow, I can't remember or not, but gold went parabolic in 2020, right? Because people were fearful that money printing was going crazy, inflation was going to go through the roof. Again, this is what we're trying to paint the picture, why fundamentals matter before we dive in. Of course, the dollar now, this year, the inverse has happened. We've seen inflation coming down. We've seen interest rates sort of stagnate. The rate hikes have slowed. And potentially, the dollar or the market is forecasting for more dollar weakness. So, again, there's a lot of stuff that I just threw at you. And some of the newer traders, I can understand that might have been a little bit overwhelming. More experienced people in the audience, you guys are going to say, hey, okay, we got that. But the newer traders, what do we look for? What are some things? Well, my company here, who is in the office or in the office nearby and here today, we build tools to try and help with this, because it's a serious task to try and look and figure out what to pay attention to. So, for example, things like economic figures, paying attention to what big players, hedge funds, are buying and selling. Political and geopolitical events, right? For example, Russia invading Ukraine, that caused the markets to go crazy. So if you're just looking only at the technical charts, even if you don't end up taking away anything from fundamentals, I think that even if you're a purely technical trader, adding understanding to the fundamentals today will be a huge help to you. So yeah, more stuff we could dive in. So also, we have two things in the building here today that I want to make sure everyone gets a chance to check out. One is totally free, one is not, but I want to tell you guys about Market Pulse first. So Market Pulse is a website that will get you tons of great news. And actually, I've been fortunate enough to be asked on to be their co-host of their podcast that they do. So I want to, if you guys would like to leave today and keep up to date, if you like podcasts, some of you guys are traveling a long ways back, check out the Market Pulse podcast. It comes with, I think we do 3 podcasts a week, giving you fundamental breakdowns of the current market, totally free. You got articles, and actually it's just such an excellent resource, and my co-hosts on those podcasts are incredible as well. Also, our tools, you may have seen them coming in the back. We're going to dive into a little bit of that today, and I would encourage you to just check them out and see if that's something that you think might be interesting to you or helpful to you. And again, we'll have some breaks where you can hear more about that. So in terms of economic figures, the first thing I'll show you guys is, this is one of our core components to analyzing markets. GDP growth. If you're a sports fan, what I always equate these things to is if we're trading currencies, if we're looking at currency pairs, we may want to analyze key economic data. I mentioned a second ago, guys, we talked about inflation. And inflation was a serious problem in the last couple of years. This data that you're seeing on the screen right now, this is the inflation data over the last couple of years here. And when we're comparing these two currencies, when you're trading a currency pair, think about what you're doing. If you're trading the euro against the dollar, you have to pick a favorite and pick a not favorite or a loser, right? You have to pick a winner, pick a loser. It's kind of like, in some cases, you're watching a basketball game. There was a basketball game last night where it was the Hawks and the Celtics, right? If you had picked one team over the other for your factors, you could have, in some cases in currency trading, that's what we're trying to do. We're picking a winner or picking a loser. How do you pick those things? Well, again, you could look at technical charts, but you can also look at some key economic numbers. For example, this is inflation. So if we're looking at inflation, here's the U.S. specifically, right? So inflation, I mentioned, was falling, which has been a really bullish thing, or inflation rising was a very bullish thing for the dollar, because people were saying, hey, they're going to have to raise rates to get this inflation under control. Raising rates, strong for the dollar. The inverse has sort of happened this year. Going in, or the end of 2022, we peaked in summer and have since come down. So again, what our software does, and you guys can find this on our website. You can also find it on the internet as well. Our tool is just sort of a data visualization software that is convenience at its best. But taking a look at this, if we're looking at, for example, unemployment numbers, comparing, like if we were to look at unemployment, let's compare, just for the sake of it, let's compare the UK versus the US. Unemployment, as we all know, is bad, right? Unemployment is bad for the economy. It shows weakness if the jobs market is not strong. So if we're looking at the UK, GBP, and we see the US, they have higher levels of unemployment. This would, of course, be more weakness for the pound, shows lesser strength there. Now, of course, there's interest rates, all sorts of things that we can dive into more. And again, during our breaks, I would encourage you to chat. We have several people on duty who are trained in this stuff to take a look at it with you, if that's something you're looking at, if you want to look at more. Let's keep going, though. Outside of economic figures, we also have monetary policy, right? This is set by the Federal Reserve, central banks. It's, talking about these interest rates and inflation rates. We've taken a look at, for example, if we take a look at the Fed Tracker, which is a cool little tab that we've built. This shows key things that the Federal Reserve pays attention to. Where is inflation going? Is inflation expected to decline? Right now it is. Right? The expectation, the forecasts, our inflation continues to come down, and interest rates stagnate. So this has been sort of, it's the dollar, for example, if we're looking at this, what does this tell us? Well, the dollar has sort of lost some of its steam recently because, again, interest rates are not forecasted like they were a year ago to just keep going and going and going, which was just a clear road ahead for the dollar for a while. So again, we paint these pictures and we stack things in our favor to try and build biases. And I say we because myself and we have Frank in the building, he's one of my trading partners. We've been trading together for a number of years. This is stuff that we're looking at. So institutional activity, this is probably my favorite thing to look at. And I'm going to touch on it very quickly, but I would encourage you guys, again, to chat with us more about this. And Frank is in the building as well. He's one of the developers of our software with us. COT data. Have any of you guys used COT or looked at COT data before? Raise your hand if that's something you've looked at. Okay, a couple of you guys. So intuitively, this is really cool because hedge funds, big money, they employ a lot of people, and a lot of money goes into research on assets, their future valuations, what they think they're going to do, right? And so when we can track what those players are doing, that's a valuable resource because, again, if you get Goldman Sachs telling you, our research indicates this, that's valuable because there's a lot of smart people that work there. They employ PhDs and intelligent people all over the place. So COT data, for example, if we're looking at gold right now, what we've done with this is we've broken it into, and this is what, one of the contributing things when I'm taking a trade, when I'm looking at a setup, I'm considering what is the big money that's out there, what do they think? Because I may be more hesitant to buy the Japanese yen when the Japanese yen has a massive short interest from institutional traders. If somebody really, really, intelligent in this stuff and very wealthy and they had a lot of money and resources, if they told you that they're forecasting for the yen to be weak, it would be probably something for you to be like, okay, I'm going to be careful about just going and doing the opposite of them because, of course, nobody is right all the time. This stuff is difficult. That's why we're here. But if you know that the inherent winners of this game are buying or selling an asset, it's a valuable resource to traders. So that's why we've visualized this. This is data that is available outside. You can get this sort of thing for free. You can find it on the internet. But the reason that we exist as a company is we've built these tools in what we view to be a lot easier to read and simple to understand. So again, you can find these things for free on the internet. But again, we've kind of tried to make it a little bit easier to understand. So again, find us during the breaks if you want to ask more about retail activity, institutional activity. So we also have a retail sentiment thing, but I want to show you guys something cool. While we're here, again, OANDA has been nice enough to help us to do this event, to get the spot and to make it a free event for everybody. They also have some really cool tools, and they're going to be offering you guys some stuff for free today for anybody who is interested in, if you're not already trading with OANDA, checking them out. Again, they've got a booth in the back of the room. This is their open positions ratio, and this is really cool because their order book shows you in terms of what retail traders, their clientele, what are they buying and what are they selling. And not to be malicious, but the reality is that retail traders, on average, they lose money. They don't make money. So in this case, it's the opposite idea of what we just talked about with this. If retail traders are piling into a long position on something, it's not necessarily a quick, just sell it. It's not as easy as that. If it was, this stuff would be simple. But it's a contributing factor that I use, and many of our traders within our team and that sort of thing, we pay attention to what retail traders are doing as a contrarian indicator. So if retail traders, for example, and again, we'll have this, you guys can get access to this for free today. At the break here, I would encourage you to step back to the back of the room, speak with Jason or Spen. They've got their, it's in the back left here. If you want to access this data, if you have a free account with OANDA, you can get access to this, and it's valuable stuff. So we have it as well, but they've got a really cool order book, and it also even goes in depth in terms of showing you. These are what we're looking at here. This is orders to go long, to go short on a particular asset. And it's not institutional, this is retail. This is the average trader. And again, not to be malicious or anything, but if we know that the retail trader, who unfortunately tends to lose money, if they're really hunting for buys, generally I'm looking at it, my opinion is to be more on the sell side. Of course, that is not the only contributing factor, and it's not that easy, but it's contributing factor, and that's what we're trying to do here today. I'm trying to give you guys more insights, pencil them down, write them down, and take away, similar to how we do, where we take lots of data and we try and build strategies around it. We'll get to strategy building later today. We got a good, I'm excited to be here with you guys. It's going to be a good day. We got lots of stuff to go through. Seasonality is another big one. This is seasonal trends. We talked about this briefly earlier on. We talked about, hey, month of April, is there a tendency? And we've got this. I'll show you real quick. Seasonality is what we call it. So we're looking here at the euro dollar. So you got that drop down right there. We'll show you whatever you want. You can do gold. You can do the pound. You can do the dollar yen. Whatever you're interested in. And it will show you the month of the year. And it will show you historically, going back 10 years, what is the pound against the dollar? What is the euro against the dollar? Does it tend to rise? Does it tend to fall? It's rather simple. It's just taking calculations and building a example or a historical bias. But it's valuable information. And this is stuff that, again, most people, when they get into trading, they just look at things like support and resistance, head and shoulders, which nothing wrong with that. I'm not here to bash that. But I'm here to add something that maybe you haven't heard of. Because again, I could stand up here and say, let's look at support and resistance. But you guys have all heard that. So I'm trying to go through some more things that maybe are new and something to think about in your own process of building a strategy, that sort of thing, which we'll talk more about in later presentations today. So building a bias, there's a lot of things I just threw at you. A lot of stuff. So how do you possibly take this all into consideration in order to actually set some up for trading, right? That's the golden question. When do you buy? When do you sell? And there is no easy answer in that way. Again, that's why we're here. But building confidence through many indications, many confluence factors. Has anybody heard that word before, confluence? Yeah, okay, lots of head nods. Cool. Confluence is basically the idea of stringing together lots of key information to build a bias. Weather reporters, they don't know with 100% certainty what the weather's going to do. And I am by no means a weather specialist, but it's understandable that they take contributing factors, they take data that they have, and they make percentage-based, probability-based calls on what the weather's going to do. So in some ways, that's how we approach trading. Not with certainties, but with probabilities. Frank is my close friend and trading partner. He's in the back of the room. This is a trade example of a dollar-yen position he took. So we're going to get into some examples today because, again, I'm talking a lot of theory, but I can understand a lot of you guys want to see some actual examples. Show me something of substance so that I can see this in action. So in this case, smart money had a heavy bullish bias on the US dollar and a heavy short bias on the Japanese yen. It actually still kind of does as of the most recent data that we've seen. Well, Frank was looking at that and saying, well, if big money is buying the dollar and they're shorting the yen, that's data to take into account when placing a trade. So he actually decided to get long, where there was also some fundamental or geopolitical stuff going on, but higher wage fears caused the bullish bias for US dollar, right? So there's some contributing factors there. And there's also a technical component to what we do. So we'll get to that. We're not trading 100% fundamentals because if I'm being honest about fundamentals, the biggest problem with fundamentals is that they don't really tell you when to get in and when to get out. They tell you which way the wind is flowing, if that makes sense, right? Is the sail full when we go this way, and is it going against us? Is there headwind when we go the other way? But that doesn't tell you, oh, just buy here, buy, sell now, right? It doesn't tell you any of that. Technicals are where we sort of use our red lights and green lights, and we will get into that today. But before I step any further, after this intro to fundamentals, do you guys have questions for me? Raise your hand. I'm happy to go through anything that you guys have for me. No questions? All right, I did a perfect job then. So in terms of fundamentals, I know that it can be overwhelming, and if I'm being honest with you guys, I've been doing this for 7 years, and I told you a little bit, I just got added on as a podcast co-host with Market Pulse, and I get on there, and there's some really smart dudes on there, and they are much more knowledgeable even than myself. I've been doing this for years and years. Well, I found out the guy that I'm co-hosting with, he's been doing it for 20, and I'm like, okay, I'm at 7, so he's at 20, and I'm like, is that going to be me? And I don't even know how I could get to from where I'm at to where he's at, because he just has so much knowledge of how every single economic figure contributes to a bullish or bearish outlook on things, and it's fascinating. But it is a journey. So yes, question.